Happy weekend, everybody. So today we're just going to look at a simple things right here. The simple strategy. It's actually simple and straightforward. The system is simple and straightforward. So I'm just going to talk about a few things. Nothing much, not to complicate the chart or anything like that. Just something which is going to be straightforward. Actually, what I can even do is I can just eliminate these so that I start breaking down bit by bit, piece by piece, what you really need to look at when taking the trades and everything else. So let me see if I can alternate here. Okay, so if you look at the graph, the market shows higher highs, and it shows that it hasn't broken the higher highs, so it's maintained the higher highs from the time it hit the resistance. The support level. It has been going all the way up. So from this point here, from the bottom here, bottom left, you see the market has just been going all the way up from this point here. So there was a bit of retracement here, this region here. But after that, we can actually see that it was just forming a bullish flag. So if we look at if you touch this point to this other point here, so the circles they show the highest level of the market. Then from this point going all the way to that point there. Let me just clear up a bit. Yeah. So from this point going down to that point, and from that point going down to that point. So there was a breakout. Just after the breakout, the market continued going all the way up, as you can see. So there was a bullish flag at this section here. So just to make things simple for you, for everyone who has a system, it's very easy. As you can see here, we have buy positions and they're floating in profits right now, as you can see. So we just entered the boom 1000 with a lot size of one, and they're floating in profits. So we didn't really take the trades at our earliest point here, but what happened, we took them along the price. So we saw that the price is going to be bullish, then we started taking some positions. So we took one position at this point here when the market was still fresh. We are looking at the daily time frame. Then we took other trades here when the market was reversing back to this point here. So there was a breakout here. So this was a resistance point. Then after the breakout, the market will always come back to do a retracement. So just after the retracement, we took other positions at that point. Then along the way, we took other buy positions here. The market did another reversal. Then we took them just at this point at the tip here. You see, we're just following the breakout rules. We follow the breakout rules of the market structure, or let's say price action. So support and resistance, simple things like that. You see, so the market has just been making higher highs, higher highs, higher highs, higher highs, higher highs, higher highs, showing that the trend is bullish. Sorry, bearish. Show that the trend is bearish. So what do? You just buy at any point. You see the sales are just really too like that. Like the sales don't have a lot of candles as the buys, because the market is in an uptrend channel. So if you follow it up, you can see that the market is pushing price up like that. So same thing here when the market was making the bullish flag. You can see it was making lower lows, and afterwards it couldn't make the lower lows. We had the breakout here of structure. After the breakout, the market pushed up, price up. Then okay, now let me make things simple. So I was going to ask a question, but let me just tell you guys straight up. Before the market changes character, before it changes direction, always know that the market has to range before it changes direction. Then when it's ranging, there's going to be always a support point and a resistance point. So where the market is going to break from, that's where the direction of the market is going to go. So in our case here, like I said, I just want to make things simple. You don't even have to look at a lot of things. You follow this simple moving average, which is here, this blue one, the one which turns blue or red. So if the market gives you a signal at this point here, like in the daily, say the market says buy, what do? You follow the blue moving average. If it's under the candles, it has a buying power. So the momentum for buying is going to be high. So whatever you're going to do, just buy. Whether the market is going to trace back or whether the market is going to play funny games and stuff like that, just know that the market is going to buy at that point. Then the other thing is, we take a look here. The market has just been going up for the past months. Has been going up. So another example is going to be it. You see, from this point here, the market has just been making lower lows like that, and this has been collapsing, going all the way down, as you can see here. So there's a signal here. Then look at where the moving average is. It's a straightforward thing here. Straightforward thing. So from this point, going all the way down, you see, it was red like that. So which means these are daily candlesticks, mind you. Put in mind. So you can see there was this green line which is here. We'll just put it as our support point. So the market tested this point for some time. Then after a breakout, push price up. And what happened? At this point, came back to do what, to retest. And after retesting, what happened? Boom, it went all the way down. So it was a straightforward thing. You have to at least apply price action together with the system. It's going to be easy for you. You're going to understand, because just to avoid like fake outs where maybe the market is going to make a condition right there, then boom, it starts ranging. So this is going to be a ranging phase at this point here, and the market does a breakout, like I said. So after the breakout, then this is where you see now the momentum going all the way down. This is where you make a lot of money. Like when you take advantage of such moves, you can double your account, you can triple, you can, yeah, you know what it is, what it is. So if you look at just the structure, how it is, the market has just been ranging and stuff like that. These are all daily candlesticks, and if you just follow the signals and the reason why we have the moving averages here, you're not going to make any losses or anything like that. Like, just have to follow what you're seeing, follow the price. The trend is your friend, and you don't have anything to worry about. Let's look at it in the 4 hours. So if we look at the 4 hours now, what do we see here? Like I said, this is a verified support, another support point. So this used to be a resistance point. Just after the breakout, a retest came through, as you can see. So the signals basically they're given after the breakout. That's how it is. So this is why we say they are 99% accurate, because they follow the structure of the market. So they're going to be simple examples. Like here, if you look at here, starting from okay, I don't even know where I can start from. Okay, from this point here, we slice here, look at that. We get our trend line, we slice here, we look at that. We get another trend line, we slice all the way up like that. Boom. Object list, yeah. So if we get the trend lines, you can just go right there at that point right there. Okay. So there you can see just after the breakout, like I said, then another point from that point following through the structure of the market, boom, we just line them up nicely by a touch of the wicks. Boom, we have another breakout. So it's these signals come after the breakout. So if this was a breakout, then boom, you get a signal. So in short, my system is so about the breakouts. This is where you get the proper signals and stuff like that. Yeah, so that's out of the way. You can see this is a guide. It guides you. So imagine you get a signal here. Before you take a trade, you wait until it's confirmed here. Once it's confirmed, or you see that okay, the market has broken this zone right here. It has broken this zone right here. Boom. So what happens? You know that the market is going to reverse back. After reversing back, this is where now you see the moving average change from red to blue. Then it's confirmed that the market is going to go all the way up. Just after the retracement, you take your position at that point. Boom, boom, boom. You go up with the market. You see? Then afterwards, it reaches that point, you can either TP, or it will reach this point, you can TP, because here now you can see the market range. Like I said, the market will range before changing the character. So at this point here, it was going to be a possible reversal back to this point. Oh, like what happened here, a breakout to the uptrend. As you can see here, the momentum was really high. So the bulls were in power at this point. This is why the market pushed price going up like that. So going down, same thing here. After the breakout here, you could have taken at least, because these are 4-hour candles. So here, these are more like daily candlesticks. So here, if you're scalping for the day, you just follow these simple rules. And a tip for scalping. Here's a tip for scalping. You look at the daily candlestick, what it represents, and also look at the 4-hour candlesticks. You start with the higher time frames. Then from there, if you look at the market being bullish, you can take your buy positions according to the 5 minutes, 1 minute time frame. So like at this point here, we have those rules where we say the market has to make a curve. Then after the curve, you can take your positions in between here. After the curve, you can take your positions in between them. But this is now where these come to play. Is now where we introduce these now back. Yeah. So here, when the market touches this lower point here, you can see the small spike like that. That's what okay. At this time, the market has been exhausted. It will spike again. After that spike, don't dare take a sell position here, because here you can see there's nothing here to show you that you're going to sell at this point here. You see, there's nothing like you're going to sell at this position. As you can see, the market super spiking up. What you have to follow, this. Once the market is above the blue MA, just so that whatever is going to happen, you're just going to buy. Don't sell. Same thing. Yes, selling from this point, you could have sold, but its advantage is going to be when the market spikes for you, it's not going to reverse back to the entry point, because the reason being is the moving average is under the candlesticks. So whatever is going to happen in the market is going to push price going up. It's just a simple concept. Simple thing. So like the way the market is trying to make the conditions here for a sale, you in your mind, you just have to put in mind that, oh, this one is under the candle. So whatever is going to happen, just buy. Where at whatever point you're going to buy it, that's why the market is going to push price up. So you don't even have to worry about anything. Yeah. You see, boom, push price going all the way up like that. So there are conditions for a sale. You see, when the crossing of the MACD and the RSI happens, this is the move which happened. Let me just alternate that to make it easy for you. Okay, so there's a crossing which happened here, going down like that on the TST. it shows the red bars. This is the movement here. So the moment this touches this point here, you can even see it says second TP, first TP. So you TP at this point here. To be safe, you TP before the spike catches up to you. So these are high risk trades. They are scalping trades. You jump in high so that you just make profit as quick as possible. These are scalps. Yeah, but if you don't know how to go about those, don't dare, because if you caught up by a spike, it will take a while for you to recover back if you don't know how to go about it, everything. But anyways, I'm here because the system is straightforward and everything else I can explain how to go about all that. So you see the blue MA here, the same thing was happening. From this point, you take your TP there. From that point, you enter, you take your TP there. But if you want to follow the spikes, just after the bars have turned from gold to red, start buying. Here in this zone, start buying to catch the spikes. Easy. You see? The same thing here. In this zone here, the market came to cover up everything in that zone. Let me show you. This is why at first I used to say, when I was making all this, at first I used to say, these bars, red bars, whatever happens, start buying within those red bars, then you see the market is going to cover them up. And it happens most of the time. You see, the market has been past that point and it's pushing price all the way up. You see, here it's just the same as like I explained here. It has made a resistance point like that. As you can see, that's a resistance point. The market tapped in there. So for some people, they're going to do what? They're going to see this. They're going to see all the conditions play out. Let me just change this color. Let me just change it to a different color, blue. Yeah. So at this point here, people are going to be like, oh, the market has reached the resistance point, has made it up to blah, 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 blah. But they're forgetting the blue area, which is under the candles. This is still showing that the market is bullish. So whatever happens here, don't even dare do anything at this point, like selling or anything like that. Just buy, because it's a breakout. It's going to be a breakout. So as you can see, the market just moved a little bit. Like I said, at this point, boom, push price up. So you see, just covered up all these red bars with one move here. And this move just took 1 minute, 2 minutes, 2 minutes, 3, 4, 5, 6, 7 minutes, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39. Just took 40 minutes. You see, just took 40 minutes to reach at that point. Then if you check, when the market is going down, it will take a lot of time for that. So the spikes will reach the target, the previous trend in the shortest space of time. So this is why most people prefer trading spikes, because they are faster when it comes to building up a profit. Oh, so we missed that other thing here. Like I said here, why you take a sell from that point here, then you wait for the touch. You wait for the touch. So the conditions were met here. These are red and this has crossed. So, but still, like I said, these are high risk trades. So as soon as the moving average touches the candles, you have to take your TP. You don't have to stay long in the market. Otherwise, it will hit you up. Once it hits up, most of the times, it takes a while to come back. But the best part, the good part, the very good part I love about following the rules. So after the breakout, you see here, when the conditions are made nicely, when you take a trade at this point here, you see, boom, the moment you reach here, you're out. But if you don't take your TP at that point, you see the market will spike. After spiking, look at what happens. It comes back slightly to your entry point. This is where most of the guys, like you saw at that time, within 5 days, they managed to hit up to make 300% of the 100 deposit. 300% of the 100 deposit. It was because of the same rules. You take a trade at that point, boom. Then you wait when it spiked. When it forgets to TPA, when it spiked. At this point, you take more positions at that point. then you go down with the market, you close the profitable positions just to increase on the balance. Then when the market reaches near his entry point, you close all the positions to avoid being caught up by another spike at that point. In fact, let's just move it a little bit here. You just wait until this one touches. Sometimes it doesn't fully touch when the market is in a strong bull power. Let me just delete this so that you see what I'm talking about. But mostly it's when the market is closer to the support points. So you see, so here it's about to touch. So once it touches here, how much profit are we making? About 80 cents. 80 cents from a lot size of 0.20. Not that bad considering the scalps and everything else. Yeah. So yeah, so you can see the market is pushing down. So the advantage you can take, you don't have to go mostly in the 1 minute, because in the 1 minute there are a lot of all these. There are a lot of these. So in order for you to maximize on your profits, not just to trade on small trends like that. In order for you to maximize, you go on a higher time frame. You start with a 5 minutes. So 5 minutes is the one which shows. You see what happens in 5 minutes. The 5 minutes is actually a perfect time frame to trade boom 1000 in. 5 minutes is a perfect time frame to trade boom 1000 in. Reason being is when the signal is given in the 5 minutes, you see it takes a while before anything happens. And once a straight up nice signal is given like that, the market has to go back to another zone. So what do I mean by zones? There's a support point here. We'll just say we use this one here. So when the market makes a signal here, so once that switches at this point, you see the spikes. The spikes are not that big, just small spikes. Another example is going to be here. The market was ranging. At this point here, the market was ranging. It was ranging. Boom. At least you can take advantage of the few candles. So our chip is about to be hit here. Though I believe the market has to reach a point. Has to reach this point here. The market has to reach this point here. From that point, it has to reach this point, because this is where the gap is. So this range here, you see, it doesn't take you out instantly to be ranging. So from the point here, boom, to be spiking here. So which means you have a lot of room to recover. You see? And the reason why I say the market has to go back to this point here, look at this one here. We have this point here. See? It will take a while, but to come back here. Here are the points here. See? Another point there, another point there. As you can see, these candles. These candles which leave the gaps in between. See? Another one here. You see? So despite the market did doing boom, like ranging a bit, it came back to that point there. Another thing, you see, you take your buy at that point there. I mean, take your sell at that point there. The market pushed price up, down. The first spike was fairly small. Another spike was not that big. Then boom, came back again. You had how many chances? 1, 2, 3, 4 chances to recover your money. You see, 4 chances to recover your money. Let's check what's happening in the 15 minutes. So 15 minutes, the market has reached this point here, but it has to come back to this point. So this point here, it has covered up all the red bars. That's why I say when you see the red bars, you can take advantage of the trend which is going to come, because you even know where the tip is going to be. It's going to be at least in that one where the red bar, where the previous signal was, the previous breakout was. That's where the market's going to raise from. So imagine here, boom, it has passed this point here. So here, we're in a range phase in the 50 minutes. So buy, sell. There is spiking all the way up TP at this point here, because you see, it's still ranging here, there. You see, it's ranging like that. And here, we're looking at it's reaching this point, but mostly it has to cover up all these red bars. So it has to reach this verified resistance point. So it's still pushing all the way up. We have a signal here for a buy, and the market is strongly in a bull trend. Let's look at 30 minutes. 30 minutes to showing the same thing. We're at a resistance point which is going to be broken after the breakout to reach this untested resistance and another resistance to cover up the previous red bars here. And the previous green bars is just like covering up. It makes it covers, makes it covers. You see, the market changes. It's actually a good thing. If you understand all these things, it's actually a good thing. So now let's look at the 1 minute now. What's happening in the 1 minute? The market has already touched here. As you can see, this is where we're supposed to take a TP. So here the conditions were right, everything was right. So at this point here, could have already taken a TP. So how much are we making? We're somewhere at $1.70. So we basically close at this point here. So from it's actually good profits if you're scalping 0.2 and you're making $2 out of it. It's actually good. Do the calculations. If you have 0.25, that's like $5. When is it? Okay, we do the math. No, we do the math. But so far so good. I don't want to give a lot of information in one video. We'll leave it as it is for now. Then happy trading. Follow the simple rules. And yeah, you're going to see. So the video will close at the time. $2 is it. So that we use the $2 to upload the video on YouTube. Isn't it? So we're looking at the time going 18, 17, and the crazy part is as we are waiting for that to hit and close at $2, we just see a spike coming through. Such things, because here it has already reached our first TP. As you can see, we followed this and it has reached our first TP at this point here. In fact, as we are doing that, let's actually see the use of the RSI here. Let's explain the RSI a bit. So here we see it says sell on the lower bottom. It says sell below the level 70. So level 70 is here. This is the level 70 here. So this is level 70. So the crossing happened at this point here. This is why I'm confident to take a sell trade, because it has happened at that point. Boom, $2 done. So at that point here, you see, this is why I'm very confident, because it's below the level 70. So here, did it go below the level 70 at this point here? This point here? Nope, it didn't. It didn't go below the level 70. This is why the spike came, spiked. Here, did it go below? Nope, there was a gap spike. Here, did it go below? Yep, it did go below. Then our TP was hit at that point. I've taken our TP. Here, did it go below? Yeah, it did go below level 70, but it didn't reach a TP. But mostly we have this line, the yellow line here, the golden line here, to show you that once the market is there, it's in a danger zone, because it's actually indicated here to say sell below, sell above and buy below this line here. In fact, this line we're going to make it golden also. The 50 level, we're going to make it golden so that people should see clearly what it means. Sell below and sell above and buy below. Anyways, KDB Fix. I'm out for now. See you in the next video.